Well, folks, it's a Saturday evening, and I'm supposed to be recharging my batteries and maxing and relaxing, and then I got bored, and I started looking at charts of essentially where we've been at in the past, P ratio-wise and whatnot, and I think we're going through one of the few time periods in the stock market you get sometimes where it is like shooting fish in the barrel for certain groups of stocks, okay? And I really want to go into detail on this because I've referenced what I'm going to show you in this video. I've referenced this a few times in videos recently, but we haven't really gone through it. And I want to explain like why I am confident that we are anywhere from 3 weeks to 3 months max away from a bottom in small caps. Now, if you know me, I very rarely ever make a short-term stock price prediction or a short-term market prediction, especially. Like, that's not something I do, right? I'm usually always focused on the long term, which I'm doing with all these stocks, right? But if you look at any time period in the last 20 plus years that, you know, the stock market has been going on, you don't ever get this sort of opportunity in the market. And when you do, it is very short-lived, and the turn on the other side is absolutely massive. So I hope you guys appreciate me doing a Saturday night video for you here and kind of taking you guys through this, okay? So obviously large caps trading extremely rich. S&P 500 large caps are at likely unsustainable levels. They have to come down, right? Now, this can come down two ways to a more normal level. One is you can get a rapid drop, like quickly, like over the next, let's say, few weeks. All of a sudden, large caps just sell off hard. You get a 5-10% correction, and next thing you know, you're trading pretty in line with where you should be. That could happen, right? You could also get a slow bleed and a rotation of money to other stocks where opportunities are, mid caps and especially small caps, right? And so those are kind of the two things that can play out. But what we know is this is not really sustainable. Or you could have a stagnation over time where these stocks don't really go up, but their earnings go up over time. So it ends up getting more into this, like, let's call it, you know, anywhere from 16 to 18.5 type range, right? Which is where we should usually be at. 20 plus, we shouldn't really be that high, okay? So that's large caps, okay? But if we look at small caps, this is really what I'm focused on here, okay? By the way, download the Hungry Bowl if you have not already on your iOS, Android store. That's how you track your stocks, cryptos, listen to earnings calls right inside the app, SEC reports, all that good stuff. And make sure you subscribe to this channel. It's absolutely free to do. Hit that subscribe button down there for more videos like this, okay? So I really want to make this big here because I want everybody to kind of see what's going on. So where we're trading at, this was as of November 30th. Now the market's dropped even more since then. So in my opinion, small caps are really trading at likely anywhere between a 14.1 and a 14.35 right now. All right. In terms of, this is looking at forward PE ratios, essentially, right? For S&P 600 small caps. So this is where the real opportunity is in this market, in my opinion, the small cap stocks, right? So if we go ahead and look here, even at a 14.5, there's only really 3 main time periods we've been lower than this, right? Obviously, massive recessions don't count because that makes all the numbers look skewed for a little period of time. So you got to throw out, obviously, the Rona crash there, and obviously the 2008 stock market crash there, okay? But in terms of like normal market conditions, it's only been 3 times in the past 20 plus years that the markets have been trading down here at these levels, right? Very late 2018, and some of you guys experienced this if you've been in the market for a little bit longer, right? The market just dropped like a rock. It was pretty much all stocks in general. Small caps obviously got hit in that. And for a very, very short amount of time, small caps got pushed down to really small levels. And we're going to talk about what happens after this, essentially, okay? But that time period, then you had for a couple months, like a 2 to 4 month span, essentially, you had small caps trading cheaper than this, right? And that was a time period where everybody's talking about double dip recession. Are we going to have a double dip recession? And oh my gosh, if you had $1 for every time you heard double dip recession during that time, it was astronomically high, okay? And so, I remember that time period like it was yesterday, double dip recession talk, all right? And so you had this time period here where small caps traded all the way down to in the 12s, right? 12, 13 type range. And then you go back to around 2002, 2003, after the tech bubble disaster, right? And you had 2 time periods for both very, very short-lived. Matter of these were kind of over within a few weeks to maybe a few months. But you had this time period here where all of a sudden, basically small caps are trading even cheaper, right? And so let's keep in mind, only 3 time periods in terms of a normal stock market situation, right? Outside of the 2008 great financial crisis and outside of the Rona, the fastest stock market crash in history, right? Only 3 times in the past 20 plus years have the markets been trading cheaper for small cap stocks than they've been trading right now, okay? Now, it's very important to understand these are very short-lived moments. When you start trading down to low 14 or dare I say 13 range for small caps, S&P 600 small caps, these are very short-lived. It's not like you go through one of these periods for years and years and years or something like that. You get a matter of a few weeks to maybe a few months max to load up on shares essentially, right? And then what else do we also notice? Every single time afterward, the rise is epic and it is fast. Look at this, okay? From the bottom there, what is that, about 2002, 2003? Look at how rapid that rise is there, okay? And if you pull up a chart of basically what these stocks did during that time period, it was off the charts. And there was so much money to be made in those stocks, it was absolutely insane, okay? Obviously, I don't want to look at the Great Recession because obviously that was a certain kind of time period there, but you can see what happened there, right? If you look at the 2011 time period, the double dip recession talk, we hit those 12, 13 type range, right? Below 14 for a very short amount of time, maybe a couple months max, maybe 3 months max, right? And then boom, and then down, and then boom, and a massive rise up, right? And then if we look at the 2018, same exact thing from here, the bottom to the rise there, right? And you could pull up literally a stock market chart and the same correlation would happen there. And so what this means is you don't get a long period of time. And so I think this is important for folks to understand, right? I think first off, it's important to understand, like, just because this is what usually happens doesn't mean it will absolutely work out this way. So I say that because can be very tempting when you look at something like this to be like, okay, give me margin money, give me call options, because we're about to go on a rocket ship ride here, starting in 2022 for these stocks, right? But I'll caution people, just because this is what usually happens over the past 20-something years, just understand it's possible this could break a trend and we go through some period where these stocks are down for 2-3 years or something like that, okay? It's not normally what happens, but I just want everybody to understand that is a possibility. So be careful if you're doing anything around, going crazy heavy on margin or short-term call options or something like that. Also, I want folks to understand that if you're sitting on your hands in this time period and there are small cap stocks you like, you might want to think again, okay? You might want to think again, because these periods are very short-lived. This is an abnormal time period we're going in. Just like when you get some epic rise in stocks and they trade to ridiculous levels, okay? You got to understand that is not normal. That does not last forever, right? And so now we have this situation. If we go back to this time last year, right, December 2020 into January and February 2021, of 2021, right? Stocks are going crazy and stocks are rising to these insanely epic levels, right? A market like that is not not normal at all, right? If you're educated on this, right? If you're new to the markets and you don't understand the way things work, or you're just like pumping stocks, right? And you're like, oh, it's going to go to the moon. And there were a lot of people doing that at that time. Oh, it's just getting the stock. It's going up, and all this stuff, right? That's going to be very short-lived, and it will come down, and those time periods do not last, okay? On the exact flip side, here we are in December now of 2021, and the same exact situation's happening, just on the reverse, where people are like, well, could keep going lower and lower. And it's like, sure, absolutely. It can absolutely keep going lower for at least the next few weeks, if not next 2 or 3 months, okay? That'd be even pushing it a little bit. But we know these periods end very quickly, and the rise coming out of them is ridiculous. And so if you want to bet against this, essentially, right? I'm talking about shorting these sorts of stocks now, or doing anything like that. You're playing a very, very dangerous game, or even buying put options. Absolutely, these stocks could fall a little bit further, but you got to understand it like this. Like, sometimes, I understand these charts are very valuable and things like that, but sometimes you got to think about it like, I like to even break things down from, it's one thing to pull up a chart of the last 22 years of the stock market and show like, hey guys, this is probably a great time to be a buyer of these small caps, right? Kind of like shooting fish in a barrel, especially for the best of the breed of those, right? But sometimes it's best to just break this down in literally like common sense, okay? So you're going through a time period where every single person who's a weak hand Every single fund that wants to tax loss harvest and everybody that doesn't really want a piece of these stocks is selling right now, right? Selling. And that's what you have going on in November, December, and you've had this going on even before this. It's just in the most substantial manner now, right? Eventually, you start running out of sellers. And so when you start running out of sellers, and then the buyers start stepping in, because remember, if you're selling out all these stocks, that means money moves to the sideline, right? Money moves to the sideline. We've seen that with individual investors. We see that with funds. They move money to the sideline, right? You can only keep that money on the sideline for so dang long, right? And if you've already moved out the mass amount of people that want to sell these sorts of stocks, and believe me, the fund managers are all starting to look at these sorts of charts, and they always do this at the very end of the year and going into the next year, and they say, where's the real opportunities in this market? And you start looking and you say, wow, small caps are trading the cheapest they've traded at in basically a decade, right? You got to go back to really like 2011, other than the teeny little blip there for 2018, right? And they start saying, I should probably start buying these stocks and buying these stocks substantially. And remember, when we're talking about small caps, these stocks move way faster than most stocks, right? Once they get the momentum behind them, the gains can be absolutely astronomical, right? And when you don't have that selling pressure there because everybody's already tax loss harvested and all the weak hands are already out of that stock, long gone out of that stock, right? Because it's already fallen 50, 60, 70, 80%. Then you get this basically rise in the stock price where it's just, off the charts. And the same exact thing if people just use common sense back in January, February with a lot of these stocks, right? Think about it from this context. You had so many stocks flying to the sky, right? Well, you started running out of buyers. That's a flat out, why did stocks start coming down? And especially, all the speculative stocks. Why did they start coming down? Because you ran out of buyers. Anything else you can debate all of this and the Fed, that's all a bunch of BS, okay? That will always be excuse. You throw that on whatever's going on in the market. Oh, it was the Fed. No, BS, okay? Common sense. You ran out of buyers. The buyers ran out. The valuation got to such crazy levels and people said, man, I can't even buy these stocks. The stimulus money stopped coming, right? And the next thing you know, those stocks started to break. And as they broke more and more, you had more and more folks say, I'm not buying that. I'm not interested in stocks. I'm getting out of this thing, right? Or just not want to buy in general. You ran out of buyers. And so that's why those stocks stopped going up and they started going down, right? There's too much selling pressure. And that selling pressure is going to likely subside in the back half of this month, but really into January is when it's going to really subside. And that's when you get the buyers coming in, the sideline money coming in. And that's why I think we're anywhere from 3 weeks to max of 3 months away from essentially a bottom in small caps. I think it's going to be sooner rather than later. I think a lot of the tax loss harvesting is going to have already been handled by basically next week, essentially. Not to say some can't come because you always get some, that basically is in the back half of December as well, like the last week. I'm just saying, and even if you look at, basically where we bottomed in December of 2018, it was around Christmas Eve. And keep in mind, in 2018, that was a stock market crash that at one point, okay, that was that was on pace for the worst December since the Great Depression. That was set to be the worst S&P 500 since the Great Depression, okay? And so, yeah, I think the last bit to fall in this market is Apple, Microsoft, Google. The biggest of the big techs, right? If those babies fall, then everything's fallen at that point, because we even started to see recently Tesla and Nvidia and some of the seen as riskier big techs fall, right? And so we have the last leg holding things up here. If those fall, everything's officially fallen by that time, right? Which will give even, I think, a lot of folks more confirmation that, oh my gosh, there's about to be an epic run here. And so, yeah, I mean, at the end of the day, if folks want to bet against this or something like that, just understand you're betting against the last 20 plus years of history. And you can say, well, this time is different. You can say that. As I say, that's dangerous last words, okay? This time is different. Okay. I'll place my bets where I want to place my bets. Everybody else place your bets where you want to place your bets. Much love as always, guys. Hope you enjoyed a little Saturday video like this. Don't forget to subscribe to this channel. Much love and peace.